David will be with Boomerang Title will be on in a minute. We're just going to let a few people hop in, and we will get started in 2 minutes. Hey, Molly, do we have some people coming in on Facebook? Let me see on my end. All right, David's here. So what I'll do is I'll go through a few slides as everyone joins in. I'll just take a few minutes to tell everyone about AZREIA, and then we'll get David on and we'll start the lunch, not another lunch and learn. Here, 1 second. All right, so I'll just get started. It's 12 o'clock, 12:01. My name is Mike Delpre, Executive Director of the Arizona Real Estate Investing Association, otherwise known as AZREIA. So welcome. This is not another lunch and learn, where every week we will be every Wednesday at 12 o'clock to 1 o'clock. We'll have a special guest from AZREIA, a business associate, a member, just teaching us something about real estate investing. So our goal here at AZREIA is to provide education, support, and networking opportunities to our members throughout Arizona, from Flagstaff down to Tucson. We've been doing this successfully since 2002. So thanks for being here. I'll just go over a couple slides. Like I said, we have our AZREIA membership. Our AZREIA membership, there's two options that we offer. Our standard option is $100 a year. What that does is gives you access to all national and local benefits. If you're not going to be that active, that's why we have this program. So if you're going to be attending meetings, maybe less than 5 or 6 meetings, we recommend the standard annual $100 option, where this one here, you would have to pay a la carte. So to that main AZREIA meeting in Phoenix Real Estate Club, it will only be $10. And for all our subgroups like fix and flip, landlording, beginners group, and so on, it would be $5. So you just pay as you go. So if you're not going to be active, we always recommend the $100 option. However, if you're going to be highly active, we do recommend our Plus membership, which is $239 a year. This membership will give you access to the main meeting, Phoenix Real Estate Club, and the subgroups, all for free. So it's an all-in price, $239 a year. And either option you choose, whatever best fits your investing, you get access to all the benefits, such as our Home Depot program, right? So we have the largest joint venture program with Home Depot in the nation. This allows you to get 2% back every 6 months. You get up to 2% back on your purchases. You get 20% off all your liquids and paint, 10% off cabinets. We have appliance programs. So there's a lot of options and a lot of great resources Home Depot provides to AZREIA members. So when you do sign up, make sure to set your Home Depot account up immediately. We have in our learning hub on our website, we do show you how to do this via video, or you can call the front desk and Rosa or Molly can help you out. This month only, in December, but Monday, July 11th, our main meeting is going to be online. So everything kind of slows down here in the summer here in AZREIA and Arizona. So July 11th, all our Tucson chapter, Northern Arizona, everything will be online Monday, July 11th here on Zoom. So make sure to go to our calendar on AZREIA.org and register. We're going to do the market update with Alan Langston in the market news. We'll do the updates, charts on fix and flip and rentals. We'll let you know what's new and coming up on the last half of the year here at AZREIA. We've got a lot of some great national speakers coming, as well as local. And then we'll do the haves and wants, where everyone's optional gets the opportunity to hop on Zoom and let the membership know what you have. Maybe it's a property for sale, or what you need. Maybe there's a certain type of property you need. Maybe you need trades, air conditioner, electrician, whatever it may be. It's your time to let the membership know. So Monday, July 11th, 5:45. Make sure to register online. Then who we have come with us, one of our national speakers that's coming up in August, Saturday, August 13th. Well, actually, Jack Bosch is going to spend the whole week with us. So he'll show up Monday at our main meeting that week in August. He'll go to Tucson on Tuesday, Wednesday, we're going to do a drill down, and Saturday, he's going to do a full day 9 to 5 class and take a deep dive in how to flip lots and land for cash and cash flow. Jack's one of our first members. He's actually been a member of AZREIA. He's local here in Arizona. He has a big event coming up in October as well. So if you want to get to know Jack a little bit better, his podcast will be out in a couple weeks. But this is going to be a great time to learn how to make money from home virtually, flipping land. So Jack is the best at it. So if you come hang out with Jack all day Saturday, it's $169 for members, $199 for non-members. And then what we're going to do is, like I said, we're going to do a drill down on the Wednesday before, August 10th from 6 to 8. It's a better way for you to it's more intimate, kind of get to know Jack, tells you his story, a lot of Q&A, and he's also going to go over the topic of seller financing. So seller financing is a great way to leverage leverage your financing through the homeowner to get whether it's houses, apartments, and here Jack will show you how to do it with land. So $50 for members for that night, $70 for non-members. However, if you do didn't pop up, but if you do buy Saturday, you do get Wednesday for free. So feel free, once again, you can register for this class on our website or call the front desk. AZREIA Show, my co-host Marcus Maloney and I, we're on our 32nd episode of the AZREIA Show. It started out coming out bi-weekly, but now we rolled it out as of this month. It will be coming out every week, Friday morning. You can find us on all podcast platforms, Spotify, Apple, Google, wherever you can listen to podcasts. We also have the video recording of the interviews on our YouTube page for AZREIA. So we're at episode 32. Eddie Gonzalez is a very successful commercial agent here in Central Phoenix. So if you want to know his story and a little bit about commercial real estate here in Arizona, definitely check out episode 32. Last but not least, thanks for letting me just kind of give you a little update what's going on at AZREIA. Our guest today is David Nielson, Director of Lending at Boomerang Capital, also a premier business associate here at AZREIA. You probably met him a bunch of times or someone from his staff at the trade show every month. So they're a wealth of information, a wealth of money for your deals. So David agreed to come on for the hour and hang out with us and talk about funding your deals. And he's gonna have a little presentation for us to go through. It's very laid back, casual kind of atmosphere. If you have a question, pop it on Facebook in the comments, pop it in the Zoom comments. We'll get your questions answered. And then we'll also have some time for Q&A. So you there, David?
Yes, I am. How you doing, Mike?
Awesome, buddy, man. Thanks for being here. I really appreciate it.
Hey, well, I appreciate it. Always love being part of AZREIA and being able to be part of the events and trying to help us all grow a little bit, make a few more dollars.
Yes, that's always a good thing, right? So what I'm going to do is I'm going to give you access to the screen here. 1 second, so you can pull up your presentation.
Perfect.
All right, you should be good now.
There we go.
So yeah, Dave, man, just hop in, tell us about yourself, who you are, what Boomerang Capital does for the state of Arizona, and jump into your presentation.
Okay, well, perfect. First of all, just to make sure you get two people jumping on the screen, right? That's what you're seeing?
Yes, sir. Okay,
good. Well, hey, excited to be with everyone today. So Boomerang Capital Partners, we are a hard money lender. We were founded here in Arizona. That's where we're at. We lend in 5 core states: Arizona, Colorado, Texas, Utah, and then just opened up into the Nevada market. What we found is that so first of all, I came from the banking industry and being able to lend to both residential, commercial, all different types of properties from the banking side. And I found that there was a large need to be able to get money quick, be able to win deals. And so we've had Boomerang Capital Partners. And one of the big things that separates us is that we are lending our own money and trying to make it so that we can make the decisions and be able to be quick and make the deals close in time like that you need to. So so that's Boomerang. We love it. We pride ourselves by calling ourselves the best flip and lender because you know, it's all about fix and flips for us. We think that fix and flips is what helps the market grow. It's improving communities one house at a time. And so we want to keep doing that. So, but here's the deal. In order to do fix and flips, you got to fund the deal, right? So that's what we're going to talk about today. And I don't know, you know, with everything going on, the questions in the market and everything, you know, we're pretty optimistic, and we continue to lend, and knowing that, you know, the market will come around. We love the real estate, the single family real estate industry, and we think that it's a great asset class to be in. So want to show you how to fund that deal and how to make decisions and kind of adapt it to today's market and how you choose your lender based on that. So first of all, just here's two pictures. So these are the world record holders for both the high jump as well as the pole vault. And so first of all, in the high jump, you have Javier Sotomayor, who jumped 8 foot 1.25 inches. I wish I could jump that. I mean, it'd be nice to be able to jump over myself. And then 2, with pole vaulting, this is Armand or Mondo Duplantis. And his record right now, which he just set a new record a few months ago, was 20 feet and 4 inches. And so what I love about this and love looking at is these are the highest jumps in that class. But 8 foot 4 inches, there's no way that Javier is ever going to hit 20 feet, right? It's impossible. And so what it takes is leverage. And that's what leverage, it helps us to achieve greatness. It helps us to be able to make more money. It helps us to be able to do lots of things. Things cannot be accomplished without leverage. And so, we're going to talk about leverage. How do we use it for our benefit? You know, a lot of things out there, such as like the Dave Ramsey model, teaches you stay out of debt, right? Don't accumulate debt. Well, I want to just be clear, debt and leverage are different. Debt is because you wanted to buy something that you couldn't afford. Leverage is I want to buy a income producing something that's going to be able to reward me and be able to, it was a calculated risk that I'm going to take. And so leverage is great if it's used correctly. So risk versus reward, right? So if you take on a lot of risk, there you should be the equal amount of reward. And so as you look at these different potentials, right, and potential returns, well, the more risk you take on of loss, the higher your return and potential return is. And so that's what you got to make sure. I'm not taking on additional risk with less return, right? I'm not going to take on. So if I could go make $10,000 on doing a flip by taking on a little bit of leverage, or I can make $20,000 profit by taking on a ton of debt and a ton of risk. Which one is better? Well, it's probably taking the 10 grand and being conservative, doing one deal at a time, and being able to leverage only to what you're comfortable. So what options do you have? If you want to borrow money, what options are out there? Well, this is where you've got to know what your tools are. What do you have in the golf bag? You know, you're not going to go to pull out your driver when you're 100 yards out from the green, right? It just doesn't make sense. And so you've got to know what options you have. Well, today, number one, used on most deals today is hard money. And what is hard money? Well, hard money is being able to say, I'm buying this property with cash. Most cash buyers are not cash buyers. They are buying it with hard money, and they're calling themselves cash. It's because it takes very little, there's little risk or little requirements in order to get the money. And so therefore they know that the money is going to come through. So that's what hard money, we're going to get deeper into that. Traditional financing. Well, that's what you're typically used to, going to your mortgage broker, asking for a 30-year loan, a 20-year loan in order to, secure property, hold it long-term. And, there's a lot that goes into being able to get that financing. And so it's not easy. A lot of borrowers that will borrow money from us want to refinance us out at the end, and they think, oh, it's no big deal, I'll just get it refinanced. Well, remember, they're looking at some of the core things. They're looking at your credit, they're looking at your cash, what you have cash wise on hand, and your capital, and then they're looking at your cash flow. Those are the three main ones that they're typically looking at. And you've got to qualify in all those regards in order to do it. The next one is a new product out there in the market. And if you've heard of it, it's the DSCR loans. It has become very mainstream. There's a lot of people getting DSCR loans right now. So what is DSCR? Well, it's kind of that middle ground between a hard money loan and a traditional financing. So when Dodd-Frank came out, what it required is that they approve every loan based on income. And so you have to have enough income to offset the payment, or else you can't get the loan, right? And so they essentially said, hey, you can't go get a mortgage that is going to cost more than what your monthly income is taking in. Well, the problem is they have qualifications that make it so you can't always use all the income you have. And so that's where traditional financing for a real estate investor doesn't work out. I one time at the bank had a borrower who owned about 50 rental properties. All of them were 15-year fixed mortgages. And so he was able to get all these properties, and they were all cash flowing, but they weren't cash flowing real strong because he had other income, but he also had all types of depreciation. He was expensing everything in his life. And so his income was not super high. So he went to go buy $1 million home and couldn't qualify for $1 million home, even though he had 50 other properties that were cash flowing. And so, wow. So that's where traditional financing was failing him, right? He wasn't able to get it. Well, DSCR loan takes into account your debt service coverage ratio of the property specifically. So it's how much money this property is making, how much is the expense for this property, and are they enough? And so in the industry, it's approved. You can go up to a 1-to-1. So you can have $3,000 worth of income on that property and $3,000 worth of expense and get qualified. As long as it's a 1-to-1, it can be covered. And so it makes it so you can buy these rental properties. Now, I do not recommend barely breaking even on a property. Now, if you're doing an Airbnb or something, maybe it makes sense doing it, doing that and being a little bit closer to that cash flow based on a long-term rental, right? So that's a big product that's come out into the market and has made it very easy for guys to go out. And I'm just curious, Mike, have you been able to look at those and see how they affect your ability?
Oh yeah, I've definitely been using them, for a while. I haven't used it in a couple months, because, I was using these in Cleveland, Ohio. So now when you get to the point where you're under 100K, which a lot of my properties are in Cleveland, the terms are a little bit more aggressive. So I actually locked in a couple here and quite a few in Cleveland at the 4%, 4.5%. This was a few months back. But yeah, it was all strictly on the asset. They gave me 75% of the appraisal value was, yeah. But now that's kind of a conversation, right? Where I actually stopped the refinance about a month and a half ago, because it was under 100K, and they just literally shot up to 6.5% overnight. Literally, I just started the process, 6.5%, and they went from 75 LTV down to 60%. So the company I was using, because every city, every state, every lender has their different terms and their criteria. So you got to really shop around. So the people willing to do stuff in Cleveland just kind of changed up on me, man. So I kind of had to slow down there. So what are your thoughts here in Arizona with the DSCR?
Yeah, so Arizona is a great market for getting loans. We're such a big market that there's such high competition. But you got to realize that all these loan providers, so a traditional finance is typically backed by the government in some regard, right? Fannie Mae, Freddie Mac, whatever it is, whoever's backing that. Whereas DSCR loans are not. They are they're true Wall Street money that's coming out into the industry saying, hey, we want to be able to take on these properties. And so you got to think about it. A local guy, Invitation Homes, right? Invitation Homes was buying properties. Well, now they say, hey, wait, time out. we can't get the properties at the price we want. Well, what if we go finance that property, get a great return, and if things change, we get to take back the properties, right? And I'm not saying they're doing it, but that's kind of the mentality behind it, right? So with the market having any questions in the market right now, these big guys are aggregators, so they're buying up all these loans and then they're selling them off as a package. Well, if they can't sell them off in a package, they will tighten up, right? They got to make sure they can sell them off, otherwise it doesn't make enough money for them. So that's changing. So that's why you saw that decrease.
Okay.
It's their way of slowing it down or making sure that they can for sure be able to sell that product off to the Wall Street market. So now in Arizona, I highly recommend just your mortgage broker that you have a relationship with. Most of them have multiple DSCR loan products that they have access to in Arizona. If they don't, then go talk to another one. There's plenty of them here. Because I'm a licensed mortgage, I'm a mortgage house as well here. They come calling me all the time, like, hey, we got this product, you need to sell our product. And so it's a standard, everyone's being shopped for that product, right? So shop it out. There is better ones too. I have one that I can sell here that I don't sell because I use it to run terms, and I'll find that, my buddy who owns a mortgage company, he can usually charge 1% less than what I can charge. And so I just pretty much to give a comparison and hand it over to him. Right.
Yeah.
So
if I could throw one more thing on there, David, for everyone listening, and this doesn't go on your credit report either. So this is huge for investors, right? Because what I think of traditionally, like when you went traditional financing, right, we get 10, and you just got to have all your I's dotted and T's crossed with traditional financing. But yeah, you can have as many DSCR loans as you want. It doesn't go on your credit report.
And it's typically a soft pull credit too, right? I mean, so it doesn't show up on the credit. It's they're great for the real estate investor. Yep.
Awesome.
Now, I don't feel like they've done the greatest job of being able to do the Airbnb properties yet.
Okay.
They've worked on it. Now as long as you can get the property cash flow on a normal rental, what happens is they appraise the property with a rental schedule that says, here's what the rents are. As long as that cash flows, you can get the financing and then go do Airbnb. But they're not basing the income off the Airbnb. So you can at least take a look at it that way of how making sure, because I mean, that's pretty hot right now, right? Being able to hold a property Airbnb and because the cash flow is just not that great as a rental right now. So,
got it.
So keep that in mind. Another one is self-directed IRAs. This can be thrown out two different ways. So one is that you're using your self-directed IRA and you want to go get a loan. We will provide hard money against with self-directed IRA to go buy the property so that it's within the IRA. And then I have a few mortgage products through other lenders that will refinance those and hold on to them long-term. Typically, a self-directed IRA requires 35% down because it has to be a non-recourse loan. And so there's a lot of requirements to them. But if you have money sitting in the stock market in your self-directed IRA or in an IRA, you want to self-direct it, there's a lot of great options to pull it out of there, put it into the real estate industry that you know and are comfortable in. Second of all, there is a whole bunch of money in the self-directed IRA category. So such as your big companies like Vantage IRA and they're all drawing a blank right now, but there's all these big companies, right, that you can go and they've got money just sitting there. People are not using their IRA money, and so they can lend it to you, and you could draft up a note, a deed of trust, protect them, and they can put their money to work in a category that they're really comfortable in as well. So, or your family member, right, that has that money sitting there that they'd rather be invested in you rather than invested into, well, I shouldn't say that, not a close family member, that breaks the rules, but
yes, there's rules to the IRA.
Yes, there's a lot of rules there, but get a good custodian that can manage that and help you out with it, and then that's an option.
We actually have a Vantage IRA coming on first week of August. We'll be on this to talk about IRAs. Good.
Yeah, get on there, listen to them. I mean, mine's self-directed. a big chunk of it, and I would rather invest it where I want to invest it, right? Rather than, mutual funds and the stock market that's doing so hot right now. So the next one, so these ones are a little bit more, as you may not have the capital to get going, you can use these options. So one is credit card stacking. It's not my favorite, but at the same time, it works, and it can get you started if you're trying to figure things out. So credit card stacking, you're essentially going out and applying for a bunch of credit cards, and there's companies that know how to do it well and be able to get you all this cash. And, a lot of times it costs you about 4% for the first year. And then after that year, you pay them back and you're good. Otherwise, it goes up to the interest rate of, 18 or 22%. Now, I want you to remember that, once again, risk reward, right? If you do that, if you look at the terms, typically the credit card stacking backdates the interest to the first day if you didn't pay it off when they're within the required term. So you need to pay it off in that 12 months. Your model needs to be a very low risk of a deal, and make sure that you can at least repay the terms. Your goal is to make money, but at least break even on that deal, right? Don't have too much risk of the downside on that deal. A gap lender and a JV agreement, those are both very similar. They're typically maybe the same person, just how they work with you. This is maybe a family friend, someone close to you that's willing to lend you that equity money to get the deal going. If that's something that you're interested in doing, I can definitely point you towards where to get the documents drawn up. I lean towards a gap lender. Protect that person as much as you can. If it's a family member, you want to protect their money. You want them to get repaid. A JV agreement puts them in the same equity position as yourself, and it doesn't protect them like a debt, right? So a gap lender can put a deed of trust against the property. They can be able to have a note that's repaid. In the case of a foreclosure, they can also foreclose as well. They can even foreclose before the first, well, they don't jump in front of the first lender, but they can start the foreclosure. So they have more control than a JV agreement. So I highly recommend going that option there. But
really quick, David, I totally missed a text here from Teresa. Do you have any companies that you can recommend for, I'm assuming, the DSCR loan?
Yeah, so my number one that I recommend, and I don't get paid for this, so just know that. But he's a buddy of mine that does a great job. So Andy Price with Price Mortgage, it's his company, and he answers the phone and does it quick. His phone number is 602-405-3605. And his email is aprice, so PRICE, at pricemortgage.com. Pretty simple.
Nice. And you can Google these. I always recommend too, right? Just shopping around, just in case he doesn't have the right terms that fit whatever you're trying to do, or the state, whatever it is. I think I used lending1.com at one point in one of my deals. There's so many.
Yep.
So just Google DSCR. That helps.
Yeah.
Cool. Thanks.
In Arizona, it was the first market to really put a bunch of mortgage brokers out there. It used to be banks lent you your mortgage, right? Arizona was so competitive that a bunch of mortgage brokers came in because they could shop all the rates, right, and be able to find you the best rate. So a good mortgage broker has multiple options to be able to run it and give you those options. Rates. I just was looking at the Wall Street numbers today, and rates went down by a whole 20 bips. So we're looking better, to be able to get that financing. So hopefully you get the right agreement there. So
hey, David, do you think? So I was talking to another like a traditional lender the other day. His perspective was he thinks we peaked with our rates. What are your thoughts on that, or is it just too hard to tell?
That's a tough one. So peaked on rates. Well, I'll be honest. I don't think we peaked. I think we did make a peak. I would say that. I think we're going to have a little bit of a correction here. And when I say correction, I don't even like that word. I think we're probably September to December, we're going to see things get right back to where they were at and keep going. Maybe not as at a fast pace as it was, but but I think rates will start to go up again. I think, if, pricing of homes will go up again. But I do think that we've got such a lack of consumer confidence that hit the market so fast, with the stocks going down, with pricing being so high, with rates going up, all those things hit all at the same time. And it was summer, and the summer
Yeah.
always, I mean, as you
It's
know, in the real
traditional.
estate industry, it happens.
I like that you said that, because I'm in line with you, because I was talking about, COVID, right? Everything, obviously we got hit, but everyone was like, bunker up, get the tuna fish cans, right? It's going down, and then we dropped, and things did stall,
Mhm.
but people still were buying. And
Yep.
those people that bought did very well afterwards. So I feel like we're in that same environment, right? Everyone's scared again. The media is saying we're in second day of recession. It's kind of like it's like they're planning it for us. They're saying, hey, here we are. It's going to last
Yep.
1.3 years. And, so, but I agree with you on the rates. I even saw like 40-year loan products out there a little bit as well. It's like they're trying to make it more affordable. Gas been going down for 21 days.
Yep.
Can we see it a little, a little dip and then another
Yep.
little rise? I see it with you, man.
Well, and just the supply chain alone was a part of the effect as well. And we're seeing the supply chain catching up again. I mean, even just a friend's business who does window blinds, they couldn't
Mhm.
get resin for a while. They couldn't get the paints, the whatever materials they needed. And all of a sudden now they've got a whole supply of them, right? To be able to do whatever
Awesome.
they need to. Or we just saw, with the stocks for Nike just had low inventory last time they reported and high sales, and this month it's low sales and high inventory, right? Their inventory caught up, but because they couldn't produce it back then. So I mean, there's a lot that's all trying to find its
Yeah.
place. We let's be honest. Do you remember, like, supply chain became like this really, really exciting degree to go get in college? Like, everybody wanted to go get supply chain all of a sudden. And I feel like we put all these supply chain guys on in that figured out how to lower their cost and be able to buy less, not have it all sitting in a warehouse. And
Okay.
then, so we got so efficient. And then all of a sudden, when we got a little nervous, we bought too much and we just screwed up the whole thing. And
Wow.
so I feel like our whole market, like the whole supply chain industry, they got so good at what they did that they screwed it all up, by getting so good. You know what I mean? So I think in general, I really, like I said, I'm optimistic. I'm really hoping September, December, somewhere between those months, we start seeing, hey, that confidence is coming back. I really think, August and leading into September is going to be the best time to buy a home. And
Yeah.
too many people are going to be worried that I need to wait for the bottom to buy, and they're going to miss it, And so
So with that being said, because you just showed us a bunch of great ways how we could fund a deal, right? So with this potentially being, what do you say to the fix and flippers out there, your clients? Like, hey, what are they doing? What are you seeing fix and flippers are doing right now, and how are they adjusting to what's going on?
Yeah. So first of all, we are seeing where people are not buying as much right now, right? So
Mhm.
you've got, number one, you've got guys who have properties. They've got properties on the market and they're not moving right now. And so right now is where you're going to find out what kind of hard money lender you partnered with, right? How are they going to work with you through this time? Because it's going to get tight. It's going to get hard. You're going 2 months longer than you expected to go. Your rehab budget went up by $20,000 because of cost of materials. So how does your hard money lender work with you? So there's properties that aren't moving yet. I just pulled one off the market. I put one on and I had very few showings. So I pulled it off and I'm just going to wait 45 days and put it back on. And that's just my decision to do on the deal. So, you've got that. Then because of that, you've got people that aren't buying yet. They're like, hey, give it a month. And so I've seen a lot of wholesalers that have canceled their contracts because they couldn't sell the property. I haven't seen that as much here yet. I've seen it start in Texas, where I think one of the markets out there, we just talked to them, 50% of their properties they let go. So
Wow.
they didn't end up executing through and being able to sell them on. So it's slowing a little bit. Now, like I said, I feel like in about a month, we're going to see, hey, these are good deals. We need to start buying them again. And the question is whether your hard money lender came back on, right? A lot of them are packaging them up and selling them off to the big guy to sell to the big guy to sell to the big guy. And if they're selling them, it's going to be very difficult to get the loan with them. Whereas someone like me that's using our own money or money that we've raised, we have that ability to, govern that, make the decision. So yeah, be careful of who you're borrowing from. Understand where the money's coming from, and what kind of, whether they're a broker of hard money or whether they're the hard money lender, right? Do they have the capital?
And definitely add in a month or two extra in your holding costs, just when you're buying the deal. Is that what I can? Okay, cool.
Hey, now with that said, go make some offers and lowball them all. Like I've got a couple that like, they just had no idea. They put in an offer and it was, $300,000 less. And they said, yes, right. There are those that need to sell and those that want to sell. Well, the need are going to sell it. So you can go put in your offers. So
you got me thinking, man. Cause like you said, 50% of those wholesalers, or those companies that backed out, think how many people that can't sell the contract because there's a lot of new investors, right? Everyone just going through the program, whatever it is, they don't know how to comp right, or they're offering higher just to get the deal locked up. The seller's excited. Now the market's shifted. These people are all backing out of deals. That's an opportunity for, whoever's listening or an experienced investor to go in there. Get the deal. It's awesome.
Put a few offers out there. There's plenty of properties on the market right now. So and those that are a little nervous are gonna, or those that have too much holding cost, they'll probably take your offer, right? And so if you're a first time buyer for a home, first of all, that's a great time to buy a home, right? Take it. So real quick on lending, I want you guys to look at this list, and just as you're looking at it, what word stands out to you? And, I want you to think about that and see which word really excites you.
So if you're on here listening, or Facebook, pop it in the comment or the chat. Let us know what word and what box pops up so we could interact with David here. Let me see if a chat came in.
And it can be rhetorical too.
No right or wrong answer.
Yeah, I want you to look at those, and here's the deal with these words. These are all words. These are all terms of the loan. This is how we set up a loan. This is what we negotiate. And the word that bothered you the most and probably stuck out to you, and I've done this many times, it's usually been what I call your trigger word. It's the word that matters to you when you're getting a loan. And I want you to remember that, because remember that that's what your loan officer is going to use to negotiate against you. And what I mean by that, let's say origination fee. Like, oh, I hate origination fees. Well, that's fine. When you come borrow money from me and I find out that your trigger word is origination fee, sure, I've got a 0% loan and I charge you 16%, or I charge you 0% origination, 12% rate, and I'm going to throw in a bunch of junk fees that are going to make up for everything, right? But to you, junk fees are just normal, right? They're just part of the deal. Like, I have to pay them anyway. Or, hey, interest. Well, okay, that's fine. Then I'm going to charge you more origination and less on the interest to make sure that that's met. So whatever that word is that sticks out to you, it's what matters, right? And sometimes you can't get around it, such as a LTV or LTC. Like, you've got to put your money into the deal. Hey, Mike, just to be curious, I'm lagging on my screen, but is it coming through okay?
Yeah, man, we're good. I hear you fine, and your all the boxes are up.
Okay, just making sure. I'm sure it's just my screen's slowing down.
All good.
So those are words. I want you to think about them. I want you to remember that in your head. I want you to remember that they're negotiating against you. And so try to find another way around it. Get comfortable with whatever it is. Run your numbers and figure it out. And so that you know what matters. For instance, if the guarantee bothers you, well, how can I get comfortable with that? Because if I put enough money down, the guarantee is never going to bother me, right? No one's going to come after that guarantee when I put down 35% down. Or appraisal guidelines. If they have appraisal guidelines, well, does my property really matter whether it has to be appraised or not? So always think that they're negotiating each one of those terms against you. So figure out your way to work around that.
I love that, man. Getting that hard money lender insight to get the best deal. Thanks for sharing that. We got a question here. What's a draw process?
Yeah, so that's really important right now, is how you get your money. So when you borrow money from a hard money lender or from a bank, and you have renovation, they want to hold back the money to give you as draws to be able to do the work. And the reason why is that way they control what's going on in the project. Well, for me, it's more so I know that it's getting done. That's what matters to me. But for some, it's truly controlling the project. So, draw processes range from one, the most difficult, which would be a bank, where you submit a pay application. They send in an inspector for $400 that goes inspects the property and tells you what percentage is complete. And then also they require all the lien waivers on the property, that you are having everybody that worked on the property sign that they're not going to place a lien against it if they get paid. So they're requiring all those things before they give you money. So number one, it took you time to get all those put together. Number two, when you send it in, you're probably waiting 5 days to get money from them. And I've worked for the banks. I've done that side, and it's just a tedious process and it takes forever. Hard money usually goes a step down from that. And what they require is they still send an inspector. Inspectors are pretty quick now. And then they're checking what work was done, and they're only giving you a portion. So typically when you submit for a draw, you submit, you're waiting probably about 3 days for between the inspection, them running your numbers, and then they're probably shorting you by, 20 to 30, up to 50% of what you requested. The third option is what we do. We really feel like we're in a partnership with you and how we lend. And so we trust you to take your own pictures. As long as you take good pictures, we will use them. And what I mean by that is that a lot of times people are like, well, I did tile, so I'm going to take a picture of tile, and they take a close-up picture of the tile. I don't want that. I want a picture from the back corner of the room, seeing the whole room. We're very fortunate to have cameras that are high quality and we can zoom into anything, right? So I want to see the whole room. I want to see the whole house. You are my inspector on the site. It's going to save you money for not paying an inspector to go out. And then if you submit everything by 2:00 in the day, we send you money next day in the morning. So we immediately send it right back out to you. Now, do we cut back on draws? We do. So if we're a reimbursement draw, so you submit saying I did the work, and then we reimburse you for doing the work. Now, if you're going way over budget, there's probably a chance that we can't give you the full amount of money. Or if all these things come up that have to happen, like we've got to look at that and figure out where's that money coming from. And we want to figure that out before we get to that. We want to know how we're going to get to the finish line. So,
awesome.
So with that said, I think Teresa, you were asking that. I think I highly suggest any rehab budget you submit, pad it, put a little more in there, contingency, make sure that you know how you're going to get to the finish line of that project. That's important today.
Awesome.
Because trust me, it might cost more.
So real quick for everyone, we're live on Facebook as well. Anyone that's just chiming in, this is not another lunch and learn. We do this every Wednesday at 12 o'clock to 1 o'clock here on Zoom. So, I highly recommend going to the AZREIA website to register so you get notifications, or you could always just hop back in on Facebook. And we have David Nielson of Boomerang Capital telling us how to fund that deal. So far, David, you showed us how to many different ways we could fund the deal on our own without your services, right? How to negotiate with a hard money lender, talked about the draw process. You gave us insight to the next 6 months in the business, right? So a lot of great stuff here. How can someone work with you? What else, maybe tell us about the terms and the programs that Boomerang has right now.
Yeah. So Boomerang is kind of a one-trick pony, to be honest. We're not trying to be, crazy out there. We want to partner with you. We want to do the right deals, and we want you to make money. So we lend at 70% of the after repair value. So whatever the finished value of the house is, we'll lend at 70% of that. And we lend at 10% here in the market. So that's our interest rate. We'll charge a 1% origination fee on the front, and that's everything. We don't have any doc prep fees, no underwriting fees, no junk fees, no inspection fees, right? Unless if as long as you can provide us good pictures, we don't charge for the inspection, for the draws, and we provide those draws right away. So our slogan is we're the best flipping lender, and I would like to say we're the quickest draw in town as well. That probably fits more in Texas when we say it. These guys with boots, but
I love it. So just so I understand myself, the 70%, that's of the purchase price or ARV, or is there two different situations?
ARV. So whatever the final value of the property is. Yep. So
who determines that?
And we'll hold back the rehab.
Okay.
Good question. So who determines that? I think that's what sets us apart from everyone. If you're buying a deal, you're probably a little uncomfortable about what that deal's probably worth and what it's going to sell for. The great thing is when you come through us, there's 3 people here in our office that underwrite and value that property. So first of all is my loan officer, one of our loan officers. So for instance, Andrew Bang is one of our loan officers. He has done 200 flips himself. So he's experienced, he's knowledgeable. Francisco, once again, he's done a bunch of real estate deals, always selling properties. He's a realtor. Tad Jones, working from the bank industry, has been able to look at them, being able to see about appraisals. So these guys do a great job of being able to look at it. They're your first eyes, and they're going to look at it and they're going to tell you, hey, I'm not seeing the value or whatever. Number 2 is Kendra. She's one of our supervisors here, and she does a great job of, she looks at every deal and approves it. And then third is me. So there's 3 of us that have valued that property and decided what the value is. We don't go get an appraisal. We don't get a broker's opinion value. It's all based on our valuation internally. Historically, we have always been about 3% conservative of what the sales price is. However, in the last 2 years, with the crazy swing in values, what the sales price has been, we've been like 35% conservative, because we're still valuing it based on today's value, not based on a appreciation that we don't understand, that we don't know how it works, right? So we're going to be conservative and make sure that you're going to do well and get through the project. So
awesome. Perfect. So and I'll put up your contact info towards the end. We got a few more minutes left here. Do you want to kind of go into the next slide, or
let me just fly through a few last things then. So first of all, I want you to figure out what is the better rate and term here. And more than anything, I want this to draw you to remembering that time matters. So don't ever just look at rate or origination fee or whatever the payback is without understanding how time plays into that. None of that matters if it's a 24-month loan versus a 6-month loan. Well, then a different one is better for you. So I want you to remember that. Always take into account how much time it's going to take you from beginning to end on a project. And then 2 is just a quick pitch on the lender. When you're going to a lender, I want you to be ready, right? So number 1, walk the property beforehand if you can, or at least see pictures. If I call you to ask a question about the property and you've never seen pictures of the property, then that doesn't look very good. You're supposed to be our eyes and ears too, as the partner and the one doing the deal. Know your numbers, put together your numbers, be ready to present your numbers and be able to answer questions about, hey, why do you think the rehab budget's only 40 grand when we're putting together our numbers and seeing 60 grand? Provide a resume of your experience, right? Like, hey, here's a couple projects. Here's pictures of before and afters of flips I've done. Provide all the documentation at one time. When the lender asks for stuff and you send it all to them one time, I promise you it'll be the smoothest process ever doing a deal, right? And we don't request a lot anymore. We're requesting very little. And then request a specific discount, right? So when a deal, when they say, hey, here's your terms, and say, hey, you know what, like this deal is going to be a little quicker than that. Why don't you give me, 25 bips off the origination fee? Or, hey, can you waive that, specifically that doc prep fee or whatever it is? Ask for something specific and try to get the terms that you want. And then the last one is go ahead.
So provide a resume. I've never done a flip before, David, but I got this sweet deal. How do I work with you?
Yeah. So what else can you put on a resume then? Well, hey, I attended John Burley's class and I was able to learn from there. I've attended Jack Bosch's class and been able to learn more about land and what to do. Or, hey, I'm part of AZREIA and I'm really well connected in the market. Those are huge. Like having that industry knowledge and being connected, that makes all the difference in this industry. So put that on there and tell them like, hey, this is the experience I have. I'm not a newbie. I've got this mentor from AZREIA that I'm using, and that's worth everything. So
perfect.
Yeah. And the last one is share your numbers. Whatever your numbers are, they're not secret. Share them with the lender. Have them comfortable with the numbers that you're thinking as well, or let them shoot holes in your numbers too and say, hey, your numbers aren't good because this and this, and so that you know what you're really getting into, right? More opinions are better to be able to figure it out. A couple of places to do numbers: biggerpockets.com, padhawk.com, houseflippingspreadsheet.com, just your own Excel spreadsheet. And then I'm going to give you, or anybody that would like it, I'll send you a spreadsheet and I'll show you that real quick. So this is just a couple websites that you can go to, the house flipping spreadsheet and whatnot. This is somebody's spreadsheet they've used and borrowed money from us in the past. So whatever it may be, but real quick, I want to show you as a final thing here. Let me change what screen I'm sharing. Let's go stop share. We're going to share a different screen real quick. Okay, so you should be, oh, nope, you don't. I'm going to push share. How about hit the button? All right, you should see my little spreadsheet here. Do you see it, Mike?
Yes, sir.
Okay, so this is, I wrote an article a while back. I've used this over and over again. I think it's the easiest thing just to be able to go quick. Very simple is this takes into account a couple key numbers, and it originally started from somebody else's numbers that were found. And now I update the numbers based on a flip that I do. So I use them based on that. So the first thing you do is you put in what your ARV is. So you do need to calculate your ARV. So let's just say the property is going to be worth, when it's all done, 600 grand. Then you put in the square footage. So, in this case, 1847, or, let's just say it's 2,200 square feet. And then what year is the house built? Well, if you watch the rehab budget, when I update the year built to 2000, it's going to update that rehab budget to what, by projects I've done, what has the cost been to complete that project per square foot based on the year. And the year matters, right? I mean, a 1940 home, all of a sudden you're going to find Orangeburg pipe that you're going to replace the whole sewer line, or cast iron versus being able to have, or having PEX throughout rather than copper underground, or, plumbing's the worst, by the way. Like too bad that it all has to go under the concrete, but your closing cost. But this, remember, I told you, you gotta be cognizant of how much time it's going to take you. If you put in your time, what your desired profit is in the deal. And today's market, or in the last few months market, it's been really about 10%. It keeps going down. It used to be 15, used to be 18. Well, now it's really only making 10% on a deal. And then this will tell you what your maximum purchase price is. So this is a very quick, fast calculation of to what you should be buying the property for and what your offer should be. And so today, if it were me and I'm going out to make a bunch of offers, I'm putting 15% in there, and I'm just making offers and seeing who accepts, right? And make sure I've got the right spread in the deal. Just real quick, there's also a smaller calculation, and what this takes into account is a full budget that you can go in and complete. So if you want to get a little more detailed, you can get deep into a budget, and it will run those numbers as well. So
awesome.
That's everything. I just wanted to share those with you, and anybody that would like them, they can send me an email, and I'd gladly, shoot that out to anybody that would like to see it. So
yeah, let me get your info up here. Let's see if it pops up. There we go. So yes, David Nielson of Boomerang Capital. Like I said, he's a premier business associate, been with us for years. Everyone looks forward to seeing you you and your team every month at the trade show. If you want the calculator, definitely, here's David's email. Tell him you're with AZREIA. You saw the not another lunch and learn. He'll know exactly what to do from there. So, David, any last thoughts or anything on your end?
No, well, hey, just go out and make a deal. I think we're still in a good time. Just make the right deals and make good choices at this time, and we'll do well.
Yes, we will. We'll be in it. You got to make offers. You got to stay in the game. So yeah, David, man, I really appreciate you coming out this Wednesday. We're going to have this replayed on Facebook. It'll also be on YouTube. We're going to also chop it up, and we're going to be sharing it on social media to push people back to the video so everyone can get all this information you shared with us today. So once again, man, thanks for being a business associate and being here, man.
Hey, thanks a lot, man.
Awesome. So that calculator, I actually, I love your presentation, by the way. Time goes by so fast. I could dig into each slide with you for hours. But that calculator, I used it on my last flip, man. It was spot on. So definitely reach out to David to get that that calculator. It's perfect.
Well, I've also had mistakes, that played into that as well. So the numbers have had good and bad deals in the front end to be able to figure those numbers out. So,
Perfect. Awesome, man. All right, David. Thanks, man. Enjoy your day.
Thank you.
Thanks for everyone for being on. Appreciate it.